This video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. Right, hello and welcome to Camel Finance. I'm your boy Camel, and finally, after what's been quite a boring time in markets, we are starting to get the markets actually speak. We're starting to actually get some signals that we can take into account. So today, I want to run through my whole top call strategy. I want to point at the new developments in the charts. And I actually want to back up a little bit for two reasons. First of all, I want this piece of work to stand alone. So if you're brand new to the channel or even slightly new to the channel, I don't want you to have to go back and familiarize yourself with the concepts. So we're going to lay the whole thing out as if you've never seen the channel before. And the second reason I want to do that is because there are always people that misinterpret and misrepresent what I say. There are always people that paraphrase or falsely accuse, and they say things like, you said this and you said that, when actually I never did. So for my own sanity, I want to lay this whole thing out start to finish so that I can just step away and then put my energy and attention elsewhere. I don't really want to be firefighting in the comments or anything like that. So we're going to lay this whole thing out from scratch, including a few key basic concepts, and then we're going to run all the way through to the hard right edge of the chart, show you the new developments, show you what I think, and then I can release this piece of work into the cosmos, step away, and go and enjoy life. So from the top, the first thing I wanted to point out is cycles and cycle failure. It's important to understand cycle failure and what it implies, so that's what we're going to do first. If we have price trade into a cycle low, like this, let's say, and bounce out of here, okay, a cycle failure is when the price then trades back below the cycle low level. Now, if we do not get cycle failure, then the only other possible outcome is that the price is at some point going to form a cycle low above this cycle low, okay? So then we get a higher low here, and if we repeat this process one final time, we draw a line underneath this level, and we do not see cycle failure, then of course the only other outcome is we form a cycle low higher than the last cycle, and this, by definition, therefore, is an uptrend, okay? If we do not have cycle failure, we are not making new lower lows, and if we're not making new lower lows, then the only other outcome we can have is an established uptrend. And of course, the inverse is true. The reason we have to pay attention to cycle failure is if, again, we get price trade into a cycle low, we draw a line again underneath that low and use this as cycle failure, but this time the price actually comes down and fails the cycle by trading below the cycle low, then it tells us, according to cycle theory, it's only reasonable to expect the next cycle low to form below the prior one. And again, if we chain a couple of these together, another bounce, another cycle failure into the next lower low cycle low, then you can see by definition we have got lower lows chained together, and thus by definition we have got a downtrend. So this is why it is important for me as a cycle trader to pay attention to when cycles fail, because if they are not failing, then by definition we're in an uptrend, and if they are failing, by definition we have to at least start to watch for a downtrend to emerge. And particularly if we start to chain together failed cycles, then we are by definition in a downtrend. The next thing I want to talk about is trend lines. Now, there's a good reason I use trend lines, okay? Cycles for me are king. Like I said, cycles and cycle failure make up the definition for an up or a downtrend. But for me, trend lines enable me to be more nimble. They enable me to get in closer to the cycle lows and get out closer to the cycle highs than if I was to simply wait for cycles to fail. Now, I will show you a couple of examples of this in a moment, but first, I want to define my 3 criteria for a top call. In case you're unfamiliar with this channel, I have 3 criteria for a top call when we have 3 established angles of attack. I need to see a third angle violation here, a breakdown of the third angle. I then need to see a second angle violation, and here's the key part, then I need the whole thing confirmed with a failed daily cycle. With that said, I now want to show you a prior example of how I've been using trend lines to keep me on trend, how I've been using them to get me out as close to tops as possible, and I want to use this example to show you the importance of remaining flexible in any trading system. So if we cast our minds back to around the yen carry trade unwind, okay, that means we are going to exclude all of this price action right here, okay? None of this existed at the time. We had already set a first angle of attack here, we had set a second angle of attack in here, and then we went on to set a third and final blow off top angle in here. And remember, none of this stuff existed. Now, at the time when we got the third angle violation, this is the reason I like to use trend lines, because this enabled me to cut this trade and sidestep the drawdown from the yen carry trade. So we were able to use this trend line breakdown to get us out, to go flat before the risk happened, and then only once the market had proven itself to us by not displaying all 3 of those top call criteria. Remember, we did get a third angle violation, we did get a second angle violation, but there was no failed cycle thereafter. So only 2 out of 3 were hit. Therefore, once momentum had returned and we got to here, we were able to get back in and then capture the rest of it. Now, upon getting back into the market, let's clean this up a little bit. We then went from having a second angle here, where I show you currently, to here. We readjusted it to encompass the area on the chart the market was respecting as support, which was clearly this level here that the yen carry trade bounced off of. And then we took our original third and final blow off top angle and reset it to a new one. Okay, we then moved this third and final blow off top angle to here, and this enabled us to go flat before Christmas and therefore stay mostly out of the way of this. We did play a stop or two in here, taking shorter term trades, but this enabled us to unwind the bulk of the positions before Christmas and sidestep the majority of this drawdown. Once again, I have been drawing our attention to how 2 out of 3 top call signals have been met. We got a third angle violation followed by a second angle violation, and I was saying that the last thing we need to see for Camel to officially call a top is a failed daily cycle to confirm the trend has truly changed. But again, based on how we handled this yen carry trade unwind back here, it showed us back then that we have to stick to the system and we have to remain flexible. It was no good doing what a lot of people wanted to do here, which was just puke the position, have a knee-jerk reaction, and then exclude ourselves from capturing the uptrend that followed thereafter. And so, as I said, today we've had 2 out of these 3 top call signals, and now we can start to make the case for whether or not we have had the third, the true confirmation of a top, a true confirmation that this really was the top and that we're about to enter a bear market walking forward. When we move into the trading position, okay, we, starting with the S&P 500 on a wick basis, failed this daily cycle here. Okay, so on a wick, we did indeed fail the cycle, but you can see we've closed much, much, much higher up. And here's the key part as well. Our level down here at the bottom, as you can see right here on the hard right edge of the screen, 5475. This was also posted in real time in the level 3 members section, was not traded yesterday. So far, by the skin of our teeth, not taken out, at least not yet. And more importantly, on a closing basis, no true failed cycle. Where things start to get a little bit more concerning is in the NASDAQ, okay? This was clearly a failed cycle. However, again, on a closing basis, just about hanging on here. Now, it's not going to take much to see this thing truly roll over and truly force me to call tops. The same is true of the S&P 500, okay? The S&P 500, also extremely close to me seeing a true top call announced here on the channel. But the complexity increases even further because when we go to the Dow Jones, we have got one of the most bullish setups I know of, which is the higher low out of a cycle low on extremely sour sentiment. Not only that, take a look at this trend line right here. For the Dow Jones at least, breakout hard retest, type 3 retest, and then looking for resumption to the upside. Hasn't done it yet, but so far, not looking too bad at all if you ask me. And in amongst all of this bearishness out there, in amongst a sea of top callers and doom posters, notice the relative strength of Bitcoin here. Bitcoin holding up relatively well, okay, still hanging around just under 84k. And as I was talking about in yesterday's video, we've also got a VIX potentially performing a lower high, again, conducive to seeing the bottom come in for the stocks and for risk assets. And so I know people want me to be really, really quick and have a knee-jerk reaction here. I know people want to see me say, well, that's it, the top's in, I'm going to dump the whole stack for some reason. I don't know why people are so keen and eager for me to do that. But based on the weight of an evidence approach, okay, yes, we've got wicking failed cycles. Yes, the NASDAQ is just a few points away from truly having me easily feel comfortable and confident in calling a top. The S&P 500 didn't even stop us out. And so far, okay, not that far off the low. Meanwhile, the Dow Jones is producing a higher low, okay, which so far, again, hard for me to be bearish on. So yes, is extremely close. This is, as well, let's make this public on record. This is the closest we have ever been to calling a top this entire bull market. Okay, the closest we got prior to this was the yen carry trade when we got a third angle and a second angle violation, and then we re-entered on momentum. That was the closest we came. We were never even close. We never even got more than one single third angle violation prior to that, the whole way up. This is the first time that we've been extremely close to forcing me to call the top. But so far, on a balance of probabilities, it's just not convincing enough for me to start to actually truly unwind my entire portfolio. It could easily change, okay? 1, 2, 3 more days, perhaps at the most, of seeing true technical damage, true failed cycles, daily closes below the original cycle lows, and then for sure, I have no problem calling it. But as it stands right now, okay, we're just not quite there, and really, really hard for me to get away from this relative strength in Bitcoin. Okay, Bitcoin holding up like a champ. It wasn't that long ago where if we saw big red candles like this, right, big downside in the NASDAQ, Bitcoin would have been, let's say this is, what is this, like 7%, right? Bitcoin would have been down 20, 25%. It wasn't that long ago that that's how Bitcoin was behaving. Right now, though, holding like a champ, okay? So again, hard for me to get super duper uber bearish here. Also, Bitcoin nowhere close to failing the cycle. right? At least not yet. Can change quickly. Hasn't changed yet. I also want to note here, during the yen carry trade unwind, when we first started to sidestep this drawdown, first started to go flat, there was a lot of mocking and jeering in here. There was a lot of people quick to say, Camel, buy the dip, and I made plenty of videos in this neighborhood saying you can't just blindly buy the dip like that, okay? It could easily develop really into something much more sinister, and we just don't know yet, okay? And it wasn't until we got the higher low that I said, okay, fine, market's proven itself to me, momentum's returned, time to get back in. But I do note, right here, we have the opposite. We have everyone trying to call tops, everyone trying to change and pivot their stance. We've got this being the kind of thing that has caused people to say, that's it, the bull market's over, I'm selling my whole Bitcoin stack and all this kind of thing. The sentiment here is extremely bearish compared to the prior example. And while structurally this is incredibly similar to 2022, allow me to show you, okay, grab hold of this. Structurally, this is incredibly similar at the moment, okay? But the sentiment here is day and night difference. At the hard right edge right here today, sentiment is extremely bearish, extremely sour, extremely bad. Back here in 2022, okay, the sentiment was nothing like that at all. Back here in 2022, let's move this over so we can see a bit. All of this, okay, was hopeful optimism. Everything's going to be fine. Here we go, told you, higher high relative to this high. Okay, then it rolls over. All down here it was, oh, it's fine actually. It's not too bad yet. This one final dip and we can go. And it wasn't until here, okay, this is where panic started to set in. This is where most people started to say, oh my goodness, it's a recession, it's 2008 all over again, we're only halfway down, 50% more decline is coming from these levels. Then we had this big violent counter trend rally, we rolled over one final time, and the sentiment in here was the worst I'd ever seen. Now the reason I point this out is because this is one of the things that put me on the radar as being a contrarian, okay, and this is an important distinction to make. In here, everyone was bearish, almost everyone. And I was one of the few that said, no, I've never seen sentiment like this in my entire 15-year career. There's no way that this resolves to new lows. There's no way the doom posters and the 50% decline fractal guys are going to be correct here. We're close to the lows. Plus we had the subtle tell that the declines from here to here to here, and then here's the key part, from this one to this one, were each losing power. And this was only a nominal lower low on a wicking basis. And I was like, that's it, right? We're going to form a higher low. We did, and then we got the breakout, right? This is what put me on the radar. And the reason I bring this up is not to say I told you so or to rub it in. This is simply to point out that I am indeed a contrarian, okay? Now, I also want to point out a couple more points that show how contrarian I am when it matters the most. We've already discussed the yen carry trade. Again, I was against the herd there because the herd was blinded by the dip, and I was saying, no, we need to manage and respect risk. But remember what happened in here. In here, I was catching a lot of heat for saying, I think we need to be cautious. I think we need to be careful. I famously posted that post on Twitter to say, I don't think we get out December and January without seeing a major top come in. And moreover, okay, I was pointing at sentiment extremes getting reached in this neighborhood, okay? Now, I have nothing but love and respect for Bob Lucas, but I remember covering this at the time, okay? Now, I know the date on this tweet here is November 15th, 2023, but this was reposted between the 4th of December and the 3rd of December, okay? So right at the top, literally right here where my cursor is, okay, is where this was posted. And what was posted was him trolling people talking about the yield curve inversion. Okay, whilst in the weekend's deep dive, we were observing the reversion above zero and starting to get that acceleration to the upside synonymous with crashes. And I was saying we really need to be careful in here because the yield curves are accelerating, as I believe that it's a highly contrarian stance to be bearish up here. And people were mocking and jeering at it and laughing away. And now look what's happened. We've had this big puke. We've had this flush. And all of a sudden, these same people that were laughing at the fact that risk was high and elevated back here are now telling you that they are expecting a downtrend lasting into June. Okay, all bounces should fail et al. And again, this is not about I told you so or any of that. This is about pointing purely at sentiment. Okay, Bob is extremely good at what he does. I have nothing but respect for his work, but he is not a contrarian trader. Okay, he is not contrarian in his heart like I am. And that's why I've written this here, contrarian at heart. It is extremely contrarian right now to be bullish and call for new highs. Nobody wants to believe it. Many people are giving up. And I still maintain that the contrarian inside of me, the contrarian that I truly am at heart, that detests and despises normality, gets upset, hot-headed and angry in my spirit when I think I'm with the herd, that guy inside of me is screaming that everyone is wrong here and this sentiment has reached an extreme. Okay, I do not believe that there is no new highs left in this market. I do not believe that these cycle failures are going to resolve to true cycle failures. I am sure in my heart that we are going to move higher here, and we are going to melt and rip faces and force all of these people that were mocking and jeering on the wrong side of the fence at the wrong time to have to chase this market higher. And again, this is not me trying to rub it in or tell you I told you so, but the reality is, by definition, contrarians are few and far between. We cannot all be contrarians. Okay, it's just not how it works. To illustrate a couple of points of how contrarian I am, it is deep in my DNA and character. During the lockdown, the day they announced lockdowns, I made a point of taking my car out for a joyride. Okay, I used to walk around at night with no phone in my pocket like a fox, just strolling the middle of the road, waiting for someone to come and tell me to go home. That is how contrarian I am. Okay, it is in me, deep inside of my spirit. I will not be part of the masses. And when I see the way the masses start to behave, because I am truly a contrarian deep in my spirit, it upsets me. It makes me angry. My blood starts to boil, because the last thing I would ever want to be is like everybody else. This is what a true contrarian is. Okay, it's not a skill set you can develop. It's not something that with practice and experience in markets you can learn to be. You either are the guy that mocks and jeers at an accelerating yield curve here and then pukes your position at the low, or you're the guy that says, you know what, I am going against the grain here. Okay, it is highly against the grain. My actions have been speaking louder than my words. If we start to see true top call signals, I'm not going to disrespect and disregard them, but I'm telling you, based on sentiment and based on how my spirit inside is feeling, it seems to be a face melting rally just around the corner here. And that is why in the members section, we've been adding all types of assets. Some of the members have been somewhat disturbed. They're like, why are you adding here? Why are you doing this? Why are you doing that? And it's because I truly am a contrarian. Okay, I can tell you my spirit is angered by what I am seeing around me. The bears have been way too confident for my liking. And so that's why we've been adding and buying the dips. Many people, if you really ask yourself the question, right, if you think you're a contrarian, how much dip buying did you do down here in the last couple of weeks? Did you buy this Russell 2K dip? Probably not, right? We were adding semis, we've been adding GME. I'm about to double down in my GME position. We've added all types of the crypto related equities at the lowest prices they've been in weeks and weeks and weeks and weeks. Meanwhile, everyone else has been buying the top and then complaining about minor underperformance, right? Our minor portfolio is doing just fine. This is because we truly are contrarian. So as ever, I am open to all possible outcomes. I am open to pivoting my stance if we see true cycle failure and breakdown. I am open to calling a top when we start to get taken out of these positions. I'm open, of course, to sticking to the system as I always do. But for now, one thing I've been extremely good at is gauging the sentiment, okay? In fact, I think it's also worth pointing out here, the lyrics that Sheepherder wrote in the outro music, right? Rocking the markets with his contrarian spree. Only a few months ago, people were actually mocking me for those lyrics. People were actually saying, why has it got contrarian in the outro music? You're just like everyone else. You're just like the herd, right? You're part of that herd mentality. The reality is, okay, the herd can be right for a while in the middle, but it is at the major inflection points where being a contrarian matters the most. Okay, and again, I suggest to you, what you are seeing here is another one of those highly contrarian stances from me when it matters the most. You saw it at the lows. Okay, there's a reason that the contrarian is in the lyrics. You saw it here on the inversion. You saw it here before the yen carry trade. You saw it here when everyone was mocking and jeering things like the yield curve, and now you're seeing it once again. Could I be wrong? Yes. If I am, then fine. We'll hold our hands up as we always do. We'll take accountability for our own actions. Another highly contrarian call that again reinforced how much of a contrarian I was this fake breakout for oil. Okay, this one in here. We had all manner of targets that went anywhere from $200 to $500 a barrel when we got this breakout. And I said, no way, no how. There is no chance that we're going that high with oil. It's going to be a fake breakout, rollover, and we'll reset the line. And that's exactly what happened. The channel OGs know, okay? Massively highly contrarian stance. But again, it's because my blood boils when I see a herd mentality. I cannot stand to think that I would be part of a herd. It's in my character. It's not something I can take credit for. It's not something that can be trained or practiced. It's not something I could opt out of even if I wanted to. Society turns to persecution of anything it doesn't agree with. It does not reward contrarians. My life would have been much easier to settle into if I could not be a contrarian. But unfortunately, it is in my character. And this is one of the reasons that I have such an infatuation and such a love and a passion for this trading game. Trading rewards people like me where society persecutes them. So let's do a bit of summing up. So far, The stock market has on a wicking basis failed for the S&P 500, but the close looks good. Super vulnerable, super close to being a top call, but based on the sentiment extreme, I do not believe that we're about to see the market fall off a cliff. Higher beta like the Nasdaq also suffering more makes a lot of sense. Probably going to see Mag 7 rotation if there is indeed a bull case. That's to be determined. And the Dow Jones looks extremely bullish to me. Remarkably bullish with a higher low, especially out of the new cycle low for the Dow. And given the VIX has got a lower high, if this thing can indeed move to the downside, then I think we have got a confirmed bottom. Any kind of spike up here would have me thinking that we are indeed going to have to call the top. But so far, okay, I remain cautiously optimistic there as well. And Bitcoin is honestly holding like a champion. You know what would be the funniest April Fool's joke of all time? You know this bearish rising wedge here? Imagine if what we're about to see, okay, is not only is this not a bearish rising wedge, but it also has a fake breakdown followed by the lockout move that comes thereafter. I think that would be the funniest April Fool's Day move for Bitcoin. It hasn't happened yet, okay, but it would not at all surprise me if it did, just based on the sentiment alone. And the yields really starting to lose power to the downside. Again, this makes a lot of sense to me. This makes an awful lot of sense. We've been talking about telling that to the bond market, watching for the 10-year yield to come off and watching all of this to be conducive to a big risk-on moment. So closer than ever to seeing the top come in, but based on the sentiment, I don't think it fits. Based on how I'm feeling deep down inside, I think there is more highs left in this. As ever, we'll continue to take it one day at a time. We'll continue to watch for those truly failed cycles, and if they occur, then we'll happily and gladly call the top. For now, we'll keep a nice close eye out on those closes, and we'll continue to be open to all possible outcomes. I'm your boy Camel. I hope you're doing well in life. Until next time, cheers, bye.
Camel finance, he's the man to see, rocking the markets with his contrarian spree. Trades like a pro, no fear, no shame, sticking to his guns in his money game. He's a badass, oh yes indeed, Camel.